apparently it's the third profits warning of the year, and they always say that well, they say that profits warnings come in threes, and this is the one for Carillion. So could be we'll have a look at that maybe in a few minutes. But I just wanted to go on to my chart of the day, or stock of the day, if I can. Which is Petrofac, the oil services company. This is just following on from the article in the Sunday Telegraph, where the stock was effectively put in play, or it was outed as a stock which is in play. Advisors are said to have be involved in doing a valuation, or come up with a valuation of 800 pence a share, which, as you can see, is roughly, well, nearly double where we are today. In fact, the stock has bounced sharply this morning, gapped up by 4%. So perhaps other people are on the case as far as this situation is concerned. Shares, as you can see from the daily chart, were much higher. They've been much higher before all the controversy surrounding the company started with the SFO, etc. But the rumor in the market is that advisors are working on behalf of large oil services companies, peer groups like Schlumberger and Halliburton in the US, and there could also be Far East interest in the stock. At this stage, obviously, with the shares around £4.20, if a bidder came in and just said, well, we'll give you £6, the company may or could just say yes to that. But obviously, as we have a rather higher valuation on the stock of 800 pence, it'll be interesting to see what happens there. But just on, as far as, to finish off with this, as far as the controversy surrounding the company, any issues are really focused on an intermediary of Petrofac rather than Petrofac itself. So it may be that the decline you see on the shares there over the spring was rather by association rather than directly for this company, which I suppose the worst case scenario is that it would just get a fine rather than anything more serious. But that's the stock of the day, up 3.5% at the moment, Petrofac.
Oh, fantastic. Zach, can I interrupt you just for a second just to ask everybody in the room if they're seeing your screen okay? Caroline has got a problem with seeing the screen. She's not seeing anything, but everybody else, could you just give us a little, yeah, okay, fantastic. Caroline, I'm afraid I think it might be a problem at your end. It might just be a case of logging out and logging back in to rectify that. Everybody else is fine. Okay, sorry, carry on, Zach. Do you want to have a look at?
Yeah, just I think the other situation of the day. Well, just going back to the Carillion story, just the share price at the moment, which I haven't actually looked at since the market opened, but we'll just get the share price there. So basically, I think we've got yesterday's prices. We'll see how that comes through in a minute. But as far as Carillion is concerned, I'll just get the story on that, which came through. Here we've got. Just get that up. Basically, third profit in the year, and the company said that it would breach its financial covenants. A combination of delays to certain PPP disposals and also issues with projects in the Middle East mean that. I think probably the worst thing you could ever hear, apart from the profits warning, is a covenant breach. And it was surprising to me. In fact, listeners or viewers may remember earlier in the week, Russell Jones, our private investor, was talking about Carillion. The shares are now down at 17 pence, so rather heavily hit, more than halved overnight. And I thought it was surprising that the deals kept coming in for Carillion, and that those people doing business with Carillion weren't rather more fussy about let's say the viability of the company itself. So very interesting. It's sort of almost too big to fail, and we'll see whether this company is in fact too big to fail. To my mind, I think there should have been a takeover or a merger in order to keep this situation safe and stable, and that did not go on. And also, I don't think the company itself has been fully transparent in terms of what's been going on. behind the scenes, let's say. Over to you, Simon.
Zach, we've got 4 speakers joining us this morning, which is going to be great. We've got the head of trading at littlefishfx.com, Patrick Munnelly. We've got Ali Crooks, the founder of Trader Support Club. We've got John Adamson from ShareTalk.com joining us at the end of the hour. We have Bryan Noble from TraderNoble.com. Brian's going to be calling in around about 8:30. So I think if we can first, I think Patrick Munnelly is going to be first up. So we'll go across and bring him in to the webinar. He's going to give us an update on the major FX pairs and the major indices. So I can see that he's in the room already, which is great. I'm going to take the microphone off and say good morning, Patrick. It's Simon. You should be able to speak now.
Good morning, Simon. How are you doing?
Oh, very well. Very well, thank you. Thanks for joining us on early Friday morning. We are in the process of the screen share, so I'm going to hand you the controls so that we're going to go and have a look at your screen. Zach's here on the line as well. I don't know if you've met Zach before.
No, this is one of the few people I haven't met in the business.
Fantastic.
Morning, Zach. How are you doing?
I'm doing very well. I was just saying that you're one of the few people in the business I haven't met. Simon Denham was one of them, and you're the second one. But as you can imagine, over the last few years, I've spoken to almost everyone who's alive in this area.
Well, it's a pleasure to meet you. Can you see my charts?
We can't yet, actually. I think there might be something that you just need to confirm, that you should have a dialog box saying confirm present. I am the presenter. A little dialog box comes up asking you to confirm or deny, and it might be hidden behind a window.
1 second. Can you see them now?
Not seeing that, no. It says that you are already the presenter, but we just can't see your screen. Are you on multi-screens?
Yeah, but I'm using this on my main screen.
Oh, there we go.
There we are.
Okay.
You can see the screen now.
I can see the screen now. So just for the benefit of those in the room, that perhaps you're the head of trading at littlefishfx.com, and we had a good chat last week. You've come from a good story. You built up your own recruitment business and sold that out and started trading as a hobby, I think, and before you knew it, you were starting to help. Your friends were coming to you for advice, and you became a full-time trader.
The story doesn't run that smoothly in terms of the ascent. I started trading with some of my personal capital, and like many who first get involved, it went extremely well in the short term, but over the medium term took a nosedive, and I lost more than I put in, and then decided I needed to get serious about what I was doing and educate myself, and I become quite a bit more self-aware to make a success of things, and that, I'm pleased to say, was 10 years ago, over 10 years now, and I've been surviving and actually thriving in the markets for the last 10 years.
Oh, that's great.
Is it one of those things in trading that for many beginners, they've got to get through the initial, let's say, learning curve? If they survive, obviously most people don't, if they survive that initial, I don't know whether it's 3 months, 6 months, a year, they can go on to be very successful, but most people throw in the towel or have the towel thrown out from them.
Yeah, I mean, I think that it's pretty much the same in probably every profession. And coming from a non-markets business prior to that, I had a similar experience in my professional career as well. Just at the point probably that everyone else would have jacked it and thrown in the towel, me and the team I was working with at the time proceeded through fairly hellish experience to go on then and have a fantastic business develop from that. And I think it's more of a mental game, I think, than a technical game, so to speak. And if you can maintain your mental toughness and persistence, then I think in most endeavors you can go on to succeed as long as you apply yourself.
Okay, well, let's have a look at the markets and see what you've got.
Good. Okay, so obviously I don't trade the weekly chart, but I wanted to just bring up the weekly chart of the S&P to give some context as to where we are. And this is obviously from the 2009 low. We are heading towards the top of the channel that's been in play for the past 10 years. This 2620, 2630 area somewhere is a point I'm going to be watching quite closely over the coming weeks. If I bring that into the daily time frame, you can see we broke out of the trend line resistance we've been trading in for most of this year. We took a look to the top side, and then we have come back this week with a bit of intra-week volatility with the issues with the tax reform bill and a few wobbles there. We retested the trend line from above, and we've held that successfully. And we now look like we're going to make another push to the upside here. And like I say, this area above 2600, I think is going to be an interesting inflection point. And I'll be watching the daily closes there as we try to push above 2600 as a potential area to look to do something on the short side. Crude oil, we have a pretty well-defined channel now that we're trading in here. I think whilst we hold 56 to the upside, I think we test down to 52, 52.50 before we should get another leg of upside in the crude market, taking us up then, I think, potentially to test the 60 area before a more significant correction develops. Gold market, trapped in this short-term range here. A couple of key areas I'm watching. Anything above the 1300 area to the 1310, again, I would look to fade that, because what I see here is a broader corrective pattern which could actually see us test down as low as 1208 to the downside. Obviously, the key inflection in terms of support is this 1260 area, but I'm more inclined at this stage to fade it above 13 and look for a move down to the 12 area. So that's another pattern I'm watching there in gold. But again, if we break the 13, if we don't get any type of rejection there, then the potential is we get a third swing here higher, which could be quite meaningful into next year above 1400. So
it's all about the patterns for you in these sorts of markets?
It is, yeah. I'm basically looking at symmetrical swings within the market and key support and resistance structures along the way to tell me, which pattern I want to keep tracking. So that's gold. The dollar, we had a pullback from the corrective high into that 95 area, which has some significance for me from both a symmetrical swing perspective and also the last swing into the prior cycle high at 103. Back end of last year. If we can hold this 93.20 area, then I still look for the dollar to test 95.40, which is the channel resistance. And ideally, I'd like to see that happen into the end of this month, just before the perceived Fed rate decision, because seasonality suggests that the dollar will struggle in December and January. So if we can get a pop into that area just in advance of the Fed, then I would look at that as a decent area to fade if we get some rejection there. The key support area for me at the moment is the 92.30 area. As long as we hold there, then that 95 remains the target. If we fail the 92, I think we probably break lows, and I would say we have a look down to the 87.80 area. But ideally, like I say, I would be looking for that pattern to play out December, January time. Moving on to the euro. Obviously, we had that squeeze in the euro this week, which caught many offside. we've held this key 1880 area on the first test, and as long as we hold that 1880, I think we still have a viable target down 114.60, which is an equidistant swing from the first leg of the correction here. Above 1850, then we'd have to look at a retest of the prior cycle highs up at the 120.80 area. Sterling trapped in a range most of the week. We're trying to make a move out of that 32.30 resistance. If we break there, then I would think we get a move up to the 33.50 area. But again, sterling is kind of capped at the moment because we have some political headlines. Obviously, we have Brexit, and then we have the domestic issues with the confidence in the current PM, Theresa May.
But hasn't it been rather stronger than people imagined? I think earlier in the week, some of the commentators.
And I think it would have been.
To break.
That's right, and I think it would have been stronger still if we didn't have these political headwinds. But I mean, I think while they're in play, we're going to struggle to make a move over 33.50 in cable is my sense at this stage. And whilst that 33.50 holds, I would anticipate that we could be back down retesting that 130 area on renewed headline risk regarding the Prime Minister or on Brexit issues. Finally here, I think we'll take a look at the Aussie. This one's been in a decline. I've got a target at 75 area, which is an equidistant swing with the first leg of the decline and the correction. And whilst we hold, whilst any bounces hold this 76.10 area, I'd look to fade those for that move down to the 75, and then I think we might see something more significant in terms of a correction. Obviously, economic data in Australia is starting to roll over. The housing market's starting to cool, and I don't see much good news on the horizon for the Aussie, apart from obviously the potential for the dollar seasonality to play into a potential bounce. And that coupled there with the Kiwi, which has just rolled over again now this morning, I was hoping that we might get a test of that trend line in the Kiwi here that we broke. I'd be looking to fade any move back to that 70 area, but it appears the Kiwi hasn't even got the legs for that at the moment, and is hoping for an early bell for the week for the Kiwi traders, I guess, and take some solace in the weekend.
Okay, well, it looks sort of relatively quiet, but nothing really standing out. Is that a fair thing to say?
Yeah, I mean, I think the key for me today, I think, will be watching this dollar. Whether or not we can hold the week's lows will be of note, I think, because that, if we can hold those lows and put in some intraday reversal bars, then I think this 95 is a target heading into next week and Thanksgiving. We'll be looking for that 95 area and then see where we go from there.
Okay, well, thank you to Patrick Munnelly from Little Fish FX. We'll have a good weekend, and we'll see how we go for next week.
Great stuff. Thanks a lot, guys. Have a good weekend.
Thank you, Patrick. Yep, speak to you again soon. Okay, Zach, I'm handing the presentation role back to you, and I think we are okay to go to our next speaker. I think we'll bring Ali Crooks in. I know we've got Bryan Noble is going to be calling us in around about 10 minutes time. So let's see if we've got time to bring Ali in now. Would you like anything you want to highlight just now?
Just the stock I was talking about before, Petrofac creeped up a bit, 425. Carillion, I shudder to look at the screen. I suppose and now it really is a bottom fishing situation. Below, it was when I think I saw 17 pence, it's now 21. So, but when you say that you've got covenants and the end of next month could be curtains, I'm not quite sure how value investors look at that. Also rising, I think Sky, probably in sympathy with the 21st Century Fox News yesterday, and in the small caps, remarkably quiet, I think, at the moment. So no big movers there, but we'll see how we go maybe after this interview.
Okay, fantastic. So we're going to go across to Ali Crooks, founder of the Traders Support Club. Ali, you should be unmuted now. Good morning.
Good morning. Good morning, Simon. Good morning, Zach. How are you guys?
Good morning.
Good to have you here. Thank you for joining us Friday morning. We've made it through the first week of our morning shows, which have been great fun. And
I hear they've been going well.
Great. Thank you very much for that. So much as we do, I know you're a regular speaker with our monthly RTC Summit events, so you sort of know the drill. We're going to do a screen share with you, and we're going to go across and have a look at your charts and ask you what you've been looking at, what's catching your eye, and what you think we might be looking at for next week.
Okay. Yeah, I'm going to talk a little bit about. Can you see my screen there? You should be able to see.
I can, yes. If everybody at home as well could just confirm, just to make sure we're on track with the technology. You're looking at Ali's ETX Trader Pro platform with a
I've got. Yeah,
fantastic.
I was going to run through a live trade because I'm in one now, so I thought it would be good just to run through why I'm in the trade and what my plan is with that trade, if that's all right.
Fantastic.
So I've got a trade on the DAX. I've been eyeing up the DAX for about a week. I'm going to go just pull the broker away, and I'll come back to that in a second. So the main view, if I go up to the weekly, was we broke the prior highs. You can see we had a big move up, and for those of you that don't follow the DAX, we broke the prior highs in October, made new highs here and pulled back. And I was watching for a pullback to the prior highs because on the weekly I had a nice, on the daily I had a nice confluence of prior highs here, area of support down here. And then as we came into November, I've got a monthly pivot, 50 moving average. And for what I do and what a lot of my students do, we're looking to make database decisions. You've heard me on Round the Clock Trader talk about this, which is this idea that you've tested certain strategies. You know that if you're going to go into that trade, you've got an edge. But how can you optimize that, and what are you looking for? So for me, this was more of here was not the key. Not the key strategy element of what I'm doing. This was more the levels that I saw on a combination of, as I said, the pivot, moving average, prior highs, looking for a bounce at this level. We obviously came a little bit lower down. So for me, I was looking for a 1 hour entry, and the 1 hour we as a group of students test. So if I just go to my 1 hour chart, you'll notice down here that we came down, tested a pivot, went a bit lower, and what I was looking for was price to push back above the pivot level, which we got just here at 4 o'clock on Wednesday. And then I was looking for an entry on the pullback down to the pivot. You can just see it there. So we had a pullback down here, and I entered long at this point. Now, it's not a huge position that I'm in at the moment because I'm looking at this over the longer term. The daily chart is the chart for me where I feel there is room to the upside based on the levels that we've come in. So really it's just a simple pullback trade, and I'll be looking for a target up at this level here, so up at around 13,300. If I could run it up to the pivot, so up to MR1 up here, that would be great. But for me, initially I'm looking at a target here of 13,300. But what I'm going to do is try and build a position on this. So rather than just simply trade it and hold it up to there, I'm looking to build a position and what I call shave off profits as I'm going along. So from where I am here, you can see that my current position is up. This is where we are here. We've got Jahi speaking at 8:30, so there may be a bit of jumping around going on over the next half an hour or so. I'm not concerned about that because I'm taking a longer term view. So currently, if I just show you the order, I am at break even in terms of my stop. So my stop is at this level here. So how am I going to build a position on this? How am I looking to take my long-term view and build that over the short term? Well, very simply, at the moment, we've broken this trend line. We've come up to the trend line. That was my cue to move up my stop, because from where I am on that trend line, yes, we may break it. Yes, I may have a longer term view, but I'm coming into an area of resistance. I've got the pivot just in here, and you'll notice I've got the highs from the 14th at this level here. So for me, I'm not going to do anything more with this trade unless we break these highs. So I want the short-term time frame, the 1 hour, to confirm the view that I'm looking at over the longer term, which is off the daily chart. So yes, I've got that view that we can pull back and head up towards the 13,300 mark up in this area here, possibly 13,371 up here. But for me, I'm not going to add to this position unless I see a new high in this area here. I'll just get a pen and draw on what I'm going to show you. So for me, I need to see price come above the highs of the 14th. And then if we came back and pulled back into this level here, then what I would do is I would look to add to the position and then also start to move my stop up on the initial trade. And this was a trade that we had in our trading room. We called it in the trading room, and a lot of the guys that I'm trading with are doing exactly the same thing. So for me, it's about adding to this position, and then what I would do, again, if we came up from there, I would break the high. If we got another break of the high, then the initial stop would come up on the first trade, and then a stop would come up on the second trade, and that would be it. So I'd only look to go in at 2 positions and then see if I can run those up to the 13,300 mark. Now, there are some other stop management processes that we use, but for me, this is just something simple. So I've got a long-term view on the DAX. So I say long-term view as a day trader, long-term view over the next day, 3 days, week, whatever. So I'm looking at that for a move back up into this area. Yes, maybe we're going to go up and get a new high, who knows? I'm not really too concerned about that. We've got a nice area of confluence. We've had the setup on the lower time frame. So for me, I'm looking to build a position on the DAX, and if we can get above this level, we can get above the pivot, get above the highs of the 14th, then I would be looking for that to move again. Again, we got the highs there, but once we've broken the trend line, the higher term view, I would be looking around 1330. So that's the only trade I'm in at the moment. That's the market that I'm focusing on at the moment. In terms of anything else, let me just get rid of this. If I have a look at Euro just very quickly, so I'll just pull Euro up for a second. For me, if I go up to the daily chart on Euro, we had this downward trend channel that we'd been watching, and we come down to this area here, and we had a couple of nice intraday trades this week. Once we broke the trend channel, I was saying to the guys in the room, I'm looking for a break of this trend channel. I'm not looking to trade this from a swing perspective because this area is a little bit too tight. We've got the pivot, we've got the prior highs, which we just came in and tested here on the 15th, but there was a nice little area in here for some intraday trades. So as the swing trader, for me, I would be looking for these highs to be broken before I would consider any kind of trade in this area here. But for me, as a swing trader, Euro's not looking too great at the moment, but as a day trader, there's been some good opportunities. You can just see some of the candles have been fairly good, fairly long in their, in their moves. So yeah, so for me, really at the moment, I'm focusing on DAX and looking to build a position on this trade. And for me at the moment, I would like to see Euro get above these highs, and then I could trade in this area here. In terms of if it comes down, moves down into this area here, not as keen because you've got a little bit of traffic in here, but yeah, that's really what I'm looking at. The pound, I'm not seeing a lot of opportunity. There have been a few day trading opportunities, but from a swing point of view, it's all very tight. So that's me really in terms of what I'm actively involved in at the moment.
Ali, thank you for that. Concise and good. We have a couple of comments coming in for you. Yat says, just commenting on the Euro, is the Euro an inverted head?
If you want to call it that. You know me, Simon, I try and keep it quite simple. Is it an inverted head? Possibly. I'm more concerned less with the pattern and more with the levels. So for me, as a momentum trader, or as a day trader that's trading momentum, I want to be either side or inside the levels. So for me, the simple rule of don't trade long at resistance, don't trade short at support, or move your stops up. If you're in a trade, once you reach your resistance, that's more my focus in terms of the resistance and support levels. Is it an inverted head? Possibly. Am I too worried whether it is or it isn't? No, not really.
Okay, fantastic. And a question from Frank as well. Morning, Frank. Do you have a view on gold or silver?
I don't. We can go and have a look at a quick chart quickly. Do I have a view? At the moment, this is very choppy. For me, again, if I was looking at it from a swing point of view, it's got to be above 1,300 an ounce, the highest you can see back in here in October. If we were up and got above this level, then I would look potentially for longs. I don't actually day trade gold. I day trade oil, but I don't trade gold. But in terms of my view, I would be more bullish if we could get above this area here, but we'd be above the pivot. Now that may not happen this month. Obviously, if the pivot levels change, then I might take a slightly different view. But for me, yeah, very simply on gold, I would want to be above this level here. Some people say gold's got more downside. Again, as a technical trader, I'm not too concerned about what the opinion is. For me, it's these two levels here. I would be more bearish if we got below the lows of October, and more bullish if we got above the highs of October on gold.
There we go. Okay, fantastic. Zach, any questions from you?
Hey Simon, I'm here.
Oh, good morning, Brian.
I'm
If you just if you could stand by, we're just wrapping up with Ali. Thank you.
No, I'm just I'm impressed. Anybody who does a live trade ahead of Draghi is a hero of mine, I can say.
Stops at break even, Zach. So it could be a very different scenario in about 10 minutes. So.
Okay, we'll see how that goes. Good luck, obviously.
Ali, thank you for that. You're back with us again for your regular slot at the RTC Summit event on the 23rd of November. So we'll look forward to that. You've got some more time to do another lesson there, which will be great.
Look forward to it. All the best, guys. Thank you.
Thank you very much indeed.
Cheers.
For coming and joining us. Many thanks. Okay, Zach, I'm going to pass the presenter role back from you. That was Ali Crooks from the TradersSupportClub.com speaking, and we are now going back to look at Zach's screen, but we have a guest calling in, Bryan Noble, TraderNoble.com.
Morning, Zach.
Morning, Brian. How are you? Long time no speak.
Indeed. I was in Florida for the last few weeks. We had an eventful trip back. We had an aborted takeoff on late Wednesday night, which I've never involved before. So the plane was halfway down the runway. Wheels just started to take off when the pilot suddenly put the brakes on, and we were stuck on the runway for 4 hours. So eventually got back at 4:30 this morning. So anyway,
well, at least you're safe and sound.
Thank God. So thank God he did abort the takeoff or whatever. We never found out what happened, and there was nothing in the papers, so nothing unusual.
Better to be waiting on the ground, I think. There we are, Brian.
Exactly.
Listen, thank you so much for joining us. I know you're just back in the door a couple of hours from that trip, and you've maintained your commitment to come and join us, which we appreciate. So thank you for that. We want to have a quick update. I know that you do the daily blog and the updates. Maybe you can share some thoughts with us. Zach has the screens in front of him, so if you just direct Zach to what we want to look at.
Okay, Zach, I suppose that after yesterday's aggressive bullish move in the US stock markets, I suppose we start with the S&P, if that's okay with you.
Okay, yes, I'll have to call it up, but I'll do that. And what are your thoughts there then? What's your angle?
It's incredible. I haven't spent the last 4 or 5 weeks in the States. The one market that really surprised me is the property market. I'm in quite an affluent area of Florida, and the property market has not moved in over 3 years. There's just very, very little activity going on, and obviously the recent hurricane that we had didn't help either. But it's incredible with stocks at all-time highs, and literally every analyst that you speak to wants to get bearish, and yet every time we sell off, the market just keeps bouncing. And I think this 2550 area is now major support, and I know we tested it on Wednesday afternoon. We also tested on Tuesday afternoon as well, and yet each time the market has bounced 15 to 20 points very, very quickly. And you know, are we going to get the tax reform through that Trump is trying to? I don't think so. I think even though the House passed it yesterday, we still got to go through the Senate. I think it's going to take another 9 to 12 months before this thing gets passed, but not to the extent of the tax cuts that they're looking for. But against that, you just can't be short this market until we break some key levels. And you know, the 30 handle move off the lows of Wednesday just proves that again. Even though the internal readings of the market are still extremely weak, the McLennan oscillator, although it's still, you know, improved hugely yesterday, it still closed at a negative -70 last night. So internally, this market continues to be weak, but it's still a buy in dips, and it's interesting. I did an interview on IG Index about 6 weeks ago, and the presenter put up a chart on the S&P, and 85% of their clients have been short the S&P, and this is when we were trading at 24.95. So it's amazing. Here we are, nearly 100 handles higher 6 weeks later.
Well, clearly they're all hedging their long positions. They're
yes.
long stock folios. or not. But I mean, I think, you know, that's the thing. That if you're looking at an intraday chart of any of these indices, you just, if there is a blip to the downside, it's not that there's a rebound. It's a cork in water type rebound. It's you know, it's aggressively coming in. I mean, the people could see the chart there of the 15th of November, but you just have the hourly bar down and the hourly bar straight up, not retesting it, not retesting the low, just straight back up again. Yeah,
and you know, I have a measure target that we can possibly get up to kind of 26.20 to 26.40 area, and then we can, you know, maybe trying to go short. But as you know, if you're trying to sell this market, you can only be short for a few hours. Your timing is going to be spot on, because otherwise the buyers return. And you know, on the blog itself, we had a really strong week this week. We were buying the dips. Both Tuesday and Wednesday were huge days for me and for my clients on the buy side. We were looking across all the indices, like the 5 indices that I cover, all got hit on Tuesday and Wednesday, and unfortunately we covered these markets too early. But that's the whole nature of my commentary, is to get in, get out, and for as little risk as possible. And thankfully, we've no short levels yesterday, because anybody trying to sell the markets yesterday just got killed.
Right, and just those positions that you took earlier in the week, well, the half an hour, you were in for half an hour, I mean, presumably the market snapped back quite quickly.
Yes, they did, and they hit my take profit level. So for, you know, every day I have a specific take profit level for each market that gets hit. If too many of them get hit at the one time, then I'll do an updated email to try and reduce the exposure. And obviously, you know, if your currency is weak, it's obviously very good for the stock markets, and the weaker dollar certainly is helping the US indices over the last few days. And you know, you look at all the technical analysis, they're all very bearish on the euro. They were calling the euro down to the head and shoulders support at 112, and yet we get down to just into the high 115s, and then that turns around very quickly as well. So, as you know, no central bank wants a strong currency except for the Bundesbank, who
I mean, it seems to be a case of, yeah, the you know, the markets traders seem to be chasing their tails here. The movements seem to be dictated more by what positions traders have, rather than what the fundamentals of of that particular market may be. So we sort of know that everyone's short up to the eyeballs of cable. Everybody's like looking for it to break 130, and it never goes below 130. The same sort of thing on the euro. The snapback again, it just seems to be dictated by people's positions rather than any reality.
Yes, I mean, I totally agree with you. But I mean, that's the way the markets have been all year. You know, they've been very, very skittish, and there's not a huge amount of liquidity around. And you know, you got to just trade what's in front of you. You know, take your points where they're there. If you don't take them, somebody else will, and just wait for the next trade. And you know, that's the whole basis of my particular service, because we try and get a macro position on these markets. You certainly would have been short the S&P, probably 200 or 300 points lower than here. And you know, if you take the third standard deviation for the S&P is up to 27.92. Are we going to go there? I don't know. But I mean, you know, if we go back to the Japanese situation back in 1989, and you know, when the Nikkei broke 28,000 and went up to the insane level of 39,000, and yet 10 months later was trading down to 23,000. So I think something similar will happen in the US market. We just need a catalyst for it. But it's extremely difficult just trying to, you know, it's costing a lot of mental capital and physical capital trying to sell these markets. So you just got to go in front of you until we get a sell extreme and break these levels that I've been mentioning earlier on.
Right, your update, your report comes in at 3 o'clock in the morning UK time. I was obviously always waiting for that. can't go to sleep until that comes in. But for people who are new to your service, there's obviously several markets you talk about. It's a big overview. Would you go for an approach where you just follow one market, like say the DAX or the Euro, and just to get your toe in the water?
But I find, the market's a bit different at the moment. The S&P, the US markets is certainly a buy on dips. I think the DAX and the FTSE both gave sell signals when the DAX broke 13,200 last Friday and the FTSE closed below 74.50. It was interesting that I know the DAX bounced, reasonably aggressively late on Wednesday, haven't got down to the mid 12,800s. Whereas the FTSE can't bounce at all, and obviously the rebound in sterling is hindering the FTSE at this stage. But I would certainly, if you want to, I cover 10 markets. Obviously, that's a lot. Certainly, there's a broad-based markets there. You can do 2 or 3 of the indexes. Certainly, look at the euro, and silver has been a particular winner for me for the last couple of years. Even though silver doesn't really trade a huge amount of volatility. But, we've been able to pick off 15, 20, 25 points quite consistently all year. And that's what it's all the whole idea is just to try and get as much money as I can and move on to the next trade.
Okay, well, that sounds very healthy. Bryan Noble from tradernoble.com. A pleasure to speak as always, and hopefully you'll join us again soon.
I will. I'm glad to, Zach, anytime you need me.
Yes.
Bryan, thank you for that from Simon. Have a nice weekend.
Thanks, Simon. You too. Take care.
Okay, Zach, we are we have one final speaker. John Adamson of Share Talk is got the share he'd like to talk about today. And John, I'm not sure if you're with us. We're a little ahead of schedule. Are you in the room?
Hi, Simon. Yeah, good morning.
Good morning. Thank you for that. I know we said about 10 to 9, but we were just racing ahead this morning, which is great.
That's fine. Yeah, I've been listening all morning, so that's fine. Not a problem. I think I'm gonna have a look at Angus Energy today, Zach. I'm not sure whether I'll call it stock of the day, but it's certainly the stock we're looking at today, if that makes sense. I thought to provide a bit of balance between some of the good stocks we've been looking at. This is one that's not doing so good today. So,
well, you're trying to offset
it's the yin and the yang, I guess, isn't it? Yeah, exactly. And I think, so Angus Energy is a UK oil play operating in the Weald Basin alongside the likes of UK Oil and Gas, Alba Minerals, Europa Oil and Gas, whoever else. There's a number of companies in that area. Their main focus of late has been getting towards production at their Lidsey well, which they've now announced this morning that they have commenced production, albeit at a matter of 40 barrels a day. So therefore, you've seen a very significant drop in share value this morning. So I think the last look, it was
40 barrels a day figure.
Exactly, yeah. So
it's like a small pub, isn't it?
It's not a lot in the grand scheme of things. So it's not just that. I mean, they do state it's significantly below expectations and what have you. So I mean, the things to note, I guess, that this is one of 3 reservoirs at Lidsey. So they will be, first of all, they've got to clean up that original well, and then they'll be looking at the other 2, getting the other 2 reservoirs onto production as well. So they will be looking to increase that, but by how much remains to be seen. I believe for shareholders or for possible new entrants, they may be looking towards the Brockham play now, because if Lidsey is obviously proving up not to be as prospective as originally thought, then the hopes obviously rest on not just Brockham, but they've got a prospect at Homewood as well. So yeah, bad news essentially for Angus shareholders, but we've seen Angus bounce from similar areas before, but I feel today's news obviously changes the fundamentals of the company for me quite significantly, because on my level, I wouldn't be confident that they could increase that output at Lidsey significantly enough to maybe get that price back up to the 30p range.
I think, isn't it playing the devil's advocate here? For me, the real surprise was the rally from June and July, where the shares tripled, etc. I couldn't see why that was the case. I mean, really, we know that, in these wheeled oil plays, there's probably more oil in my head than there is under the ground, and you can humour these companies, but we haven't seen the big the big numbers. I mean, the south of England just supposed to be just really a small. The conventional wisdom is just a small bit of oil there, and it is the 100 barrels or 200 barrels if you're lucky, and that's it. So this is just not a surprise in a way.
First thing to say, I'm not an oil and gas analyst. I'm not an expert in the sector, so take what I say with a pinch of salt, obviously. But I feel that I would agree with you that rise was probably overdone, given that Lidsey was never originally going to be highly prospective in that regard anyway. It was never going to be in the thousands of barrels a day. So I think the smarter the investors who know the story will sit tight and probably hang on for commencement of works at the other two prospects. But we've got Horse Hill drilling starting next year as well. So I mean, it remains to be seen whether this is going to be the start of a trend in not so good results coming out of the Weald Basin or not. UCOG, well, you've got them up, yeah. They announced this week they've got 10 million incoming. They've not got it yet, I believe, but they've got 10 million incoming, so that's obviously going to be used to progress their works now. So they've got the flow testing ongoing at the moment, so we'll see the results of those flow tests probably over the next 6 weeks or so. It may get into 2018 before they're finished, but we know they've already commenced those works. So if it gets, it'd be interesting to see if that get back to the sort of 10p dizzy heights that it hit a couple of months ago. But ultimately, the flow test results is what's going to drive the price there. So we'll just have to see what comes out. But they've got a significant fund in there, and I believe I can't remember the name of the financiers, but they're not doing that on a punt, I believe. So they've got some data so far, but I think you've got to. They're nowhere near really showing what the full value of that prospect is at Broadford Bridge.
Okay, well, we'll see how that goes.
Yeah.
No, I mean,
what are your thoughts on the chart there, Zach?
Well, the chart here, I suppose, at least it's the black line there, 200-day moving average. So, if I was an enthusiast, I'd be looking to put a toe in the water towards that level, and hope that then the rally from June, reasserts itself. But Angus for me was supposed to be the better play, or the safer play, and I can't wait till next year, and I can't wait until next year to see 50 barrels come out of the ground. I mean, it's a bit disappointing. So I need somebody to show me that there's significant hydrocarbons under the ground under Gatwick.
Yeah, it remains.
And that we can actually get at it. So the early summer rally was just was interesting. It was also interesting, I think, that quite a few people sold out of smart money sold out of that rally as well. So it's as if people do know what the true nature of the resource there is, but like you, I'm not an oil and gas expert, so we should. I hope to be surprised.
Yeah, I mean, personally, I'm not convinced there's an oil and gas expert out there who can tell us what those results are going to be yet. So until we see the proof in the pudding, I'm not really going to call that either way.
Okay, well, on that note, John Adamson from ShareTalk.com, thank you very much. It's been a great week with the Greatland story yesterday, and hopefully we'll have something not quite as juicy, but maybe nearly as juicy next week.
Okay, thank you, Zach.
Thank you, John.
Yes, have a good weekend.
Thanks, Simon.
Zach, we have a question from Mansuk asking, do you have a target on PFC?
I think I'd go with what I was saying before, that you've got that valuation of 800 pence a share, and I sort of think that the company might roll over ahead of the SFO getting in too tight there. So I think the £6 level makes sense in terms of where the shares are now. Let's put up the chart here. But technically, I mean, you got the 200-day moving average of £5.89, so that sort of ties in with the fundamentals and the technicals there. So I think around the £6 area would be nice. And obviously, you can see the stock has been hit so hard already, and we've had a reasonable base. I'm hoping we're not in Carillion mode here with this one. I didn't like Carillion. I've sort of smelt a rat, but presumably the people who were shorting it in recent days also smelt a rat. But this situation, I think, is less of a structural one and more of a, let's say, sentiment one.
Okay, thank you. What about BT? Yat is asking, BT now oversold?
Yeah, I was looking at this. I think it wasn't very nice the way that the company, after the initial Italian trauma, it sort of leaked out a bit more bad news. I'm not really sure whether they've kitchen sinked this situation. The chart here, the problem with the chart here is that you've got this, you've got these gaps to the downside which haven't been filled. So the gap down there on the initial scandal news, another one there, nowhere near to being filled. That shows sort of runaway momentum. Can't quite remember the recent fundamentals in terms of the dividend and stuff like that, but I think we've still got the risk of a £2.20 destination on this stock. Doesn't seem to be really any rallies have been very, very half-hearted indeed. So I think it's one of those situations to maybe stand aside a little bit longer. I can't believe the CEO is still there, and the problems of this company need to be sorted out.
Okay, great. Thank you for that. Any other final questions? Thank you. The questioners are saying thank you to you, Zach. There. I think that rather neatly brings us up almost to 9 o'clock. Any final comments from you, Zach, before we close out for the weekend?
Yes, well, there's one just thing on Bitcoin. Apparently, the fork in Bitcoin, don't ask me what that means, but the fork in Bitcoin will be between 2 o'clock and 4 o'clock this afternoon, UK time. So one would imagine there'll be even more fireworks than usual in that area. So if you're bored this afternoon, maybe that's the market to take a look at.
Fantastic. Well, Zach, from myself, thank you for hosting us through our first week of the morning show. I think it's been well received. Excellent session, much appreciated, says Caroline. Have a great weekend, and you. So I think we've enjoyed it. We're going to continue next week with some more speakers, some of our regular presenters, and more guest speakers coming in to join us for the hour. So hope you can all join us for that. So Zach, I think we'll close up there, and we'll look forward to seeing you all again on Monday morning.
Thank you very much, Simon.